Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video. It is Friday, April 11th, 2025. I'm Wayne. It's about 20 minutes roughly in front of the close here on Friday. Here is the Market Rebellion trustee disclaimer. Here is the Market Rebellion trustee intellectual property rights notice. And then here is just a quick look at last week's slide, trying to cut down on these mainly by request. So these are some of the things that we talked about last week. I spent some time on this, as I recall. Um, so nope, this has got a little bit of a typo, some typos. I don't know how I did that. Must have gotten out of order. I'll have to jump through that. I apologize for that, folks. Some of this stuff is from last week. Yeah, some of it is. So anyway, we came in really with the news neutral assumption. Most likely scenario, again, was trade what you see. I think that was probably good, right? Because we basically didn't have, knowing how really outer spacey we were in so many ways in terms of volatility and the news cycle and so on and so forth. Basically we're not going to commit, and I think that was probably not a bad idea, just to wait and see how things developed and go from there. So I'm going to end this review on that, and then talk about this week's stuff real quick and then get into the charts. So it's been obviously like a historic week. I don't have all the information in front of me. I've came across a few different things, but this is one of the most volatile weeks in in history, I believe, and well, modern history. And then it's also been very much within the last, say, 25 years. I believe it's quite highly ranked in terms of volatility. So that ought to tell you something. I'm calling this week walking in the woods because I feel like we still are walking in the woods. We are on our way out of the woods, but we just don't know how far the woods extend. And so this is a nice sign this week. I think that the market did find its footing. Quick comments are that a lot of sectors did bounce, so it was really more of an across the board risk on type of a thing, risk back on. That's the second line here. So that's sort of happening, but I think that's somewhat reflexive and somewhat due to the news developments. But I think the main takeaway for me is that there's still a lot of uncertainty and things seem fluid, and they do seem as though they could take a turn for the better, they could take a turn for the worse. So that's why I'm saying that I'm jumping down to here, you could quickly return to a throw your sheets out the window, trade on instinct and discipline market all over again. But as of right now, I'm going to jump into the news neutral assumption, most likely scenario that tries to answer the question, where are we now? I'm saying we're on the cusp of the relief rally, trying to extend after the first major leg lower, but that the long-term trends remain intact. So we'll see that on the charts. Essentially, all I'm really saying is that I don't think that the bullishness is completely broken, but I'm also not ruling out that we couldn't have another leg lower. But I think for now, if you come in with a news neutral weekend, and that might really be a bigger assumption than usual, given Trump's penchant for making news. But if you do, I think that they try to extend this rally. That would be my take on it. Just because of the way the technicals are setting up, I think it tries to come back further, but we'll see. Anyway. This is going to be stream of consciousness stuff. Just simply don't have the time to do what I'd like to, and it just gets worse and worse and worse. Hopefully, I'm going to hit the worst part soon and then be able to feel a little bit better about things. Anyway, just going to make the mention that we've been talking about the XAU for that space, I should say, for several years, talking about big picture patterns and potential. Brought it up again recently. I think I shared that there was some EOA hitting, starting to pick up. And so that had a really good week. The dollar was smoked. Yields have spiked, right, moving left to right. And the VIX is still, despite this week's and today's um, rally, right, this ability of them to just levitate back up further, you're still at 37 on the VIX. So That's why I would say, right, all these things with all these things happening, I would say you're not in normal times. And I think the VIX is telling you that there's still uncertainty out there in the minds of many. Otherwise, they wouldn't be able to keep it bid near 37, so to speak. So that's just a quick review on that. No question, I think that the breadth and sectors improved, but as I'm noting, I don't really think they had much else they could do. Realistically, unless you go into really heavy crash mode, you were so bombed out, your sentiment was trashed, your CNN fear greed type gauges were absolutely trashed, breadth was trashed, sectors were trashed, everything was trash. You had the VIX trading up near 60-ish. So that doesn't often stay that way for long. And now, at least to their credit, bulls have come back, and this is looking better. And then we have to say, right, that probably has to do with the pulling back on the worst case scenario for now, at least from Trump with respect to tariffs here, there, everywhere, and at higher rates. So that's the good news. And now we have to see if more good news follows or we have fallout. It sounds like there's good news if you want to believe what's coming out of the White House. They claim that there's 15 deals that have gotten done with different countries. So I hope that's the case. You just never know with press people if you're getting the real deal anymore. So I can't really confirm that. Anyway, I would say we're still within the maelstrom. It does make it really impossible to predict, but I do feel as though just because the technicals have really strengthened and we had such swift selling that yes, we could get more. We're likely set up to get more rebound if as long as the news is neutral and not negative. Um, don't know. We'll have to see. Right. So I think you're still going to be in that market where news and developments continue to impact it. Again, that's why you're still within the maelstrom. So you got to stay at the ready. And then these final comments, I should probably come back and make those at the end. And we should probably move on from here and get into the charts. And I'm just really going to reposition right now, but we'll get right into the charts at this point, and I'll come back if I have to over here with the with stuff. So let's get this brought back up again on a different screen and we'll get right into it. All I'm really going to cover, I think, screen two should work. All I'm really going to cover is the major index ETFs and a quick look at things just to keep things moving along. As I said, I'm super pressed for time, so I've got a lot of just a lot of things that I can't even go into, and maybe some at some point I will be able to. Let's see, get rid of percentage. So we are sticking with our charts here, and I just already mucked it up from just habit. So let's see if I can get the right one. Come on, dummy. Yeah, so I got these marked up for us to try to save us time, and then I went ahead and pulled the wrong chart anyway. Just brilliant. Anyway, as many of you will probably recall, I'm going to highlight the fib overlay that we had from last week. I believe that's the one right there. We're looking at the Qs. Actually, let me start with SPY, and we will work back. That's our main proxy, and we use the ETFs because people do like to potentially take trades from these specific levels or whatnot. So instead of the index itself. Anyway, SPY, we had this retracement situation. This here, if you can see my cursor now, is going over Monday's candle. And so that's Fridays when we looked at it and we had said that we were at the 500 day. That's that moving average there. That's kind of maybe like rusty orange colored. And then you had a support line coming in there as well, near there. And they busted that and they did actually get down to that 61.8% retracement of the big move up that I started our fib overlay, or you could say fib grid. I started that here. So that's because in my mind, that's when the last major corrective action concluded and we launched our way up to where we eventually made it to this point as a high. And so we gave back about 61.8. So that, or actually a little bit more, because you could see that the wick that day made it down even a little more from there. So they opened right near that level on Monday, and then they started to really work things up. Things were looking pretty bleak on Tuesday, and even on Wednesday morning, I think they weren't altogether wonderful. And then you all know what happened. Maybe, one of the greatest index candles I think I've seen in a very long time. I can't say how many times I've seen a better candle than this. It could be that I did and just forget, but that's really a memorable candle. What happened there on Wednesday, and then we had the pullback to the 200 in purple, and a bunch of fibs lining up there, and we held, and now they're working Friday higher. So to their credit. So the reason why I've got a whole nother set of fibs to come up the works is because I think we have to with the kind of market we're in. So this fib that I highlighted in blue is kind of more of a mini fib based upon, right, the selling that we've seen thus far, right? The price action since I would say the sellers took over because a high was registered never to be exceeded to this point in time. So that's the new grid. You can see they already got back with that Wednesday madness. They got back 50% of the selling already in the spiders to that point, but we have pulled back from there. So really, to me, the way it's all shaping up, with this being an area, you've got the 38.2 percent retracement of the smaller leg down move we're discussing. That's blue, and then you've got the major retracement that we looked at last week. And so you're kind of stopped in your tracks at the moment near those two. The next ones up are the ones we already hit. But then you start getting into this resistance line that I just made blue that was orange. And you're up in there. You've got a gap fill that would occur if you get there roughly as well. So that level is 5.5. You can see all the other levels because they should be highlighted, obviously, with numbers next to them. This is about 555. So I would say that to me is a pretty significant level. And I think your next level really has got to be the 61.8% retracement up in here. You could see that the market hesitated around that 564 to 565 level, 563, whatever you're close enough for a $560 ETF. So if you do get up there, so that would be quite a move. You'd be talking about almost another 5 to 6% up from here. But right with the right headlines, we know that you can do that and then some, and then some, and then some, given what happened on Wednesday when the gang really wants to take shares they've been forced to buy down here as liquidity providers, mark them up, and distribute them all over again. So that's what's happening with respect to the spiders. So I think the big levels are if you extrapolate this up, we'll add in the 554, let's call it 564, and you have your fibs, and you're really going to try to look for confluence. So I think it's pretty good that you were able to hold on to the uh, you were able to close back above the 500 day, and that you're seeing these improvements that we are. Let's see if I can get another look in here. And I'm sorry, this is messy, but this here is the two. Oops, that this here is the 200 day in purple, and you're back above that, I believe, as well. Let me make sure that I'm on the right chart here. Edit properties, and that should be no, that's just giving me trend line. My bad. I'm sorry about that. Oh yeah, I'm looking at the wrong one. That's just a trend line. Yeah, the 200's way back up here. So that's what I wanted to bring it up for, though. I've got 200 on the mind, but a really key area would be the 50 and 200. They're both right about there at 574. So that I'm throwing that out as your third level, and they just happen to all be fours. 54, 64, 74. Yeah, that's just the way it lines up right now. And I think there's multiple forms of resistance right there. Two SMAs that are pretty widely followed. And then probably you could make an argument that the makings of a flatliner there as well. So right about in that vicinity. So that really covers your levels there to the upside. Should you trade back down, you can see where, let's go back to the other chart for where you would be on that then. That would be right here. Yeah, here. So you would come back down. I think you'd have to give the 500 day, it's due again. That's really where the wick on Thursday formed from off the low. You've got a support line that I drew in purple coming in there as well. So that's that 511 level we talked about, roughly speaking, right in there before. That was a level that we were looking for. As it shot right through there, as you can see. But yeah, I think that's the first level down. And then really from there, there's minor levels until you get back towards these lows, should it take that course. But I really do think, again, news neutral assumption that you come in and they continue to try to extend this. And I'll conclude today by saying that I wouldn't write off the upside completely, despite how bad things look right now. That's These guys are incredible with what they do. Remember, if you're me, you believe a lot of this market's been bogus for a very long time. Not that you trade it that way, not that you invest that way, but you really haven't been on what I would call historically sound footing. It's all been, to me, mainly driven by excessive liquidity for a very long time. And I think that just papers over a lot of real problems. And then you get to this point where the country's seems highly dysfunctional ultimately when you continue to play games. But people prefer to play games because facing the truth just isn't as attractive. I guess that's the short answer. But there you have it on the spiders. I'd lean towards we continue to rally. You'll know. I think that things are derailed if they're not, and it'll likely be due to news. If we come in and they're just selling for no reason, I'd be surprised, but it has happened. Anyway, it's going to be a similar story everywhere we go in the major four. The Qs are a little bit closer, I guess you could say. I'm going to say right near 470, 172. So that's really only 3% away. That's really where this resistance line comes in as well. That's a couple of fibs. It's the big picture one. I'll show that. It's the big picture 23.6 from way back when we launched this whole multi-year leg higher. And it's also the little mini fib that I overlaid for percentage retracements from the high to low of the recent selling. So that's going to put you right up near there. That's going to be the big level, I think. And then if we get a nice 3% push higher from here, that should make for a pretty good trading week, if we get that. And if you get more, I guess you've got to really start looking at the next fib combined with other things. But that doesn't really come into play until about 488. So that's a whole nother 2% tacked on. So yeah, you could have a 5%, put you kind of within this intermediate high, if you will, right there, put you within range of that. That would be 488. On the downside, it's going to be the same situation where you've got your 500 day coming in here. You've got the mini fib that it could come back and respect 23.6 that it shot right through. Then you have the larger fibs we talked about where you retrace to that would be the 38.2 that's near there. So that would all bunch up really near Thursday's low or Thursday's wick low at 432.63, all near the 433-ish level. So I would keep that there. And remember what I typically say too. If you're new, you don't know this obviously, but what I typically say is you should think about and by the way, if you're wondering what this is my long-term trend line right here in purple, and then this is the 1,000 day there in blue. I just tried to make them different colors, hoping I could find something that sticks out more. But what I usually say, and really didn't say here, is that if you get down to a certain level, I would always tell you to bid in front of the level, right? So let's say that you thought that 480.36 was the target. Oh, that's where it should line up perfectly with my technical work, and it bottoms at 481.80. So it's just about a buck and a half away, right? You can't forego all this upside potential or covering short deltas down because you were you were that stubborn over the last $1 and change really that you were expecting, right? So that's why I always say work out your levels, but I would bid in front of those levels. And if you have a massive score and they're making it hard for you to get executions, then that might be telling you something. So don't wait around for that last dollar. I've seen it kill a lot of people. really just hurt so bad. I mean, imagine riding things down and expecting this and setting yourself up, and then you wait a little too long and you get stubborn, and then they take back. If you even if you shorted at the very top, within 3 sessions, they take back 50% of what you made, not including theta, which they've also gotten you on. So you got to be flexible and smart. So the spies and Qs are covered. Let's do the diamonds and IWM, and then we'll talk about a few more things. As you can see, the diamonds have more room than the Qs. So I'm thinking gap closure level up near here. My resistance line coming in, I just highlighted that. The same kind of mini retracement overlay or grid that I've got there. That all comes in near about 418, right? So that would be a nice little, again, you're talking about 4% pop from here, roughly speaking. That would be a nice week if we were to get it. If you want to talk about bigger levels from there, you got the larger grid fib of the whole move up, and how much of a retracement we've had. We did have a little bit more than a 61.8% retracement. So 61.8% in the diamonds is right there on the green line of 372.24, and they whacked it all the way down to 366.32. So pretty good whack right through that. Didn't quite get to that 1,000 day. And remember, we don't usually look at the 500, 1,000 day either. The only times I really go to this are times like this. I mean, they're on charts just sitting there, but I don't really look at them because they're always, well, I shouldn't say always right, but they're most of the time they're way, way, way out of view and not really a factor. They're so far below the action because you're usually trending up over the course of time. So that's your levels on the upside. You're looking at about 418 is what I would put it at. If you get near 417, you've got to be thinking it's close enough. Maybe even 416. Watch the action. But yeah, that's what you're going for there. I think if they can continue this rally, downside, you're right back at again. You're right back at the 500 day, which is right near these other fibs. The 50% fib on the big picture move we talked about, and the 23.6% on. So that's 386, 387. So you're down really another 3% from here plus, if as your first level. So if there for some reason we roll over from here, but like I said, I don't want to sound super confident because of the news factor, but I just really think they're going to try to extend this a little bit further. It just has the makings of that to me technically, but we'll see. Um, let's see here. Dun, dun, dun. Oh yeah, IWM. Let's take a look at that one. IWM's been really the laggard for so long. I don't want to go into the ancient history of us discussing IWM, but IWM did really nearly close perfectly these gaps. So the high there's 169.77 way back when. Let's see what the low 171.74, and then we had 171.73. So just a few bucks away, and again, waiting for perfect gap closure. Not something I would do, right? If you're talking big picture moves and you noticed that IWM couldn't get it going, you knew that if the markets did roll over, IWM would really get shillelaghed because it never had the mojo that it should have. I mean, for us, we almost began using it as a proxy to believe that if the market was really about to launch another leg or not, and this just continued to struggle. And we kept noting that over and over that this is not a good sign that these smaller companies just can't get it going. Not a good thing. It kind of casts a doubt on the entire rally because only the big players that seem like were really firing late stage before we got into this part of this we got into this corrective action. But yeah, this has been clearly right annihilated. It blew through. If you want to count this as the low that launched this big move up, way through the 78.6 retracement there in blue. Now I'm going to unclick that one. We have the mini grid that I added just with the recent. If you're wondering why am I not going back, by the way, why are you not going back with a fib that takes you all the way back to the high? It's because this went into this corrective phase after that. And so the market, I think, was still working up. I'm kind of saying from what's the high that preceded the break lower. That's when we really got the selling to kick in for this wave. So I'm really, it's there's three waves here so far. You maybe other people would make an argument that there's more than that. There's waves of different degrees. I'm not getting into that. I'm just saying if you look at the daily, there's three main waves. Right there's your impulsive wave, your corrective wave, and then here's your second impulsive wave. And so it's IWM is probably the one is still in the worst shape, right? Because it just can't recover. It's fallen further, and it's given up more of the gains that it had from the lows in 23 when this started launching itself higher, and it can't really recover as much. It only got up to the 38.2% retracement roughly at the high here on Wednesday when everything else went to the moon. And that's not even from the highest high that other things registered. It's from a far lower high by nearly 20 points. So, yeah, this thing is still problematic. It's below the 500, it's below the 1,000. Unless I'm going to say this, that I think unless something really dramatic shifts, and that could happen, but unless something dramatic shifts, these things really look like they're in trouble. They're having big trouble. They're the most concerning one of them all. If we look at the bigger picture stuff, I'm going to go to a quarterly. This is the one that if it takes this low out, these lows out here, and it's not far from those, right? Well, I should say it wasn't far from those at the lows this week. It really does start opening up a lot more potential downside, if you ask me. I would say you take out this week's, well, I should say these lows. These are the lowest lows. You take out the 160 level, you probably drop another 20. I'm going to say you probably drop another 20% from there. It would be my quick and dirty ballpark. So, that's pretty bad to drop after you've already fallen as far as you have. So I hope that's not the case. Hopefully we won't be talking about that. But I just don't know how you can like the look of it. The best thing I can say about IWM right now is that it's getting oversold on a weekly chart. Like there just isn't a lot of good stuff there. The second best thing is probably that at least it's not falling and it's trying to move back up. But this is relatively unimpressive when you compare it to the other things that we saw transpire this week. So if it finally starts to ignite, maybe things are changing behind the scenes in Washington and there's help on the way, or maybe in the Eccles building, whatever the case may be. Um, your next levels up are going to be these two, where these two fibs really overlap in my mind. That's going to be about 193. So that's a nice little that's almost like a 5% pop. The next ones are getting back towards the 500 and 1,000. And that would be another 3 to 4% from there, near 200. So those are your upsiders. Your downsiders are pretty clear. If you lose support on versus Thursday's lows, you probably have to start thinking they're on their way to retesting this yet again, right? This 172-ish type level. So that's what I would be on guard for there. I do think, though, this should also try to rally because I do think breadth is trying to improve. If we bring over our breadth chart, just to take a quick look at it, this is not about going into deep dives on market breadth, but um, things are getting a little bit better with new highs, new lows. The new lows are not dominating as much. You can see the McClellan is not the summation, but the McClellan oscillator that's on the verge of trying to put in a higher high versus the rally attempt we saw on Wednesday. So if they get their act together and start pushing that, that would be better. You can see that the stocks above certain moving averages is slightly upticking, and they really got cratered. I mean, they were really really trashed versus other times. So let me see if I can bring in more data just to go back a year just to show this reading. This is what I mean by the market breadth was horrendous. Like look how low we are. Maybe we'll add more time just to see. So yeah, you haven't seen a reading that's quite this ugly probably since when? Yeah, even worse than there. Yeah, you probably got to go back somewhere near these in 22, right? So that's pretty bad, right? That it's something you don't see all the time, and it's probably only every few years. So pretty bad readings on things. And remember, this doesn't correspond to IWM, it corresponds to the market itself. It just, I usually put SPY up there for us just so no one gets confused and thinks that we're looking at something related to IWM alone. But yeah, I mean, advanced decline, cumulative average, all that stuff, right? This all got whacked. You got whacked back to uh, almost right where you were way back in before they really started they had that swoon, right? We saw the swoon after EPS really concluded uh, in the summer. Then they put the goosing together, sort of double topped, backed off, held, and then they really put that late year run together. And I remember people were talking about coming in, I think it was the end of the year and coming into this year, about how people were really bulled up and saw no problems. I don't remember those folks exactly, but I do remember hearing a lot about that. And I think that's the kind of the risk of these long-term prognostications. It's pretty hard. It's really pretty hard. Things just develop, and even if you have a pretty good beat on things, that sometimes they can just develop in ways that it's just really hard. So I'm not a really big forecaster. Whenever we do that kind of year look ahead thing, I can only really look out a little bit in time and put anything I think worth anyone's time together. Just I find the big picture just very hard to forecast years in advance, just because of how things change. So anyway, there's SPY um, here, but remember the breadth is all about the overall market. Doesn't It's not symbol dependent. But yeah, it's getting a little bit better. I mean, like I said, it couldn't get all that much worse. So but it is still a positive sign that things are um, moving up a little bit that way and improving rather than deteriorating. I'm going to pull the sectors in. This is almost a silly gesture, but you could see, I'll just try to make them all a little bit bigger from right to left, and you'll just see that at least we stabilized in most of them to moved up and recovered relatively well in most of them. So you have to be happy about that. I think that XTN still not firing. I do think there's going to be problems, in terms of logistics and how everything gets rerouted because things could be fractured between countries or cohorts or whatever the case may be. But you can just look out and see how much they really. Uh, Most of the best, I would say, the best work this week was really done with the Monday save, and clearly it was done with the Wednesday goosing. And the fact that they didn't let things deteriorate back down today was also a positive. But most sectors reflect that. It's just that some of your key ones, like energy, that's not really getting off the mat that much. Financials, they definitely popped, right? But they're not in, I wouldn't say that chart looks like it's in great shape. And I still think it's going to try to move up more, but you're certainly not out of the woods. You're still in my book, you're in an intermediate term downtrend. And the other important sectors to be are XTN. That's another important sector. And the transports just don't look all that good. Utilities were bid, they're defensive. And you got your healthcare, and that was bid. That bit was bid up the way the rest of the market was. So there's that. But the things I didn't cover yet are SMH, and we didn't cover XAU. Let me bring this up on this slightly busier chart, or maybe much busier chart. But you can see just how outside of our Bollinger, our lower Bollinger, which is the dotted connected line there in green, that's how far you were extended from your 100 SMA. So that was probably, I'm going to say that was probably at least 2.5 standard deviations. And maybe what we should do is say, since right you normally stay within the bands um, when you're set at 2, theoretically you should be within oops, I'm going the wrong way. You should be within there 95% of the time, I think. If you go higher you should be in there even more. And look at this, like it looks like you'll be I'm sorry, I'm doing it again. It looks like you're going to be at least 3 standard deviations. Let's see. Yeah, so even at 3 standard deviations below, you're still well below there. So yeah, when you get those kind of excursions, that's what I call them. You get those kind of excursions, you're really oversold. The breadth was horrendous, and lo and behold, even 4 standard deviations from the mean, which is really, if you want to believe in this, it's really excessive, right? So it is what it is. So that's what you had on SMH. The market itself was pretty much in a similar boat. And you get this really, as we said, you get this really strong bounce if you get that because you have to trampoline off of such an oversold condition and come back up. But you can see all the as this has been a key sector. It's part of my argument that I like to make that makes sense out of things. And I think you've got these downtrends that are represented by these SMAs. It's a very simple way to just say what's the trend, and the trend is pretty bad. Longer term ones are up here, they're downtrending. Shorter term ones are up here, they're downtrending. So it's got its work cut out for it. But if anything can really get rip roaring, it's the semis, right? They can really go consistently. I mean, other things could get rip roaring at any time, but the semis at times really are just great movers. And we've seen that lately, and we kind of have this V recovery happening in there for now, but it will encounter the 15 in red, the 20 in light blue, ultimately the 50 if it can keep going up there. But yeah, we'll have to see. I mean, the other part of this is that the whole story we talked about for so long about is the build out and all this stuff really going to play out the way all these folks that piled into the same trades believe. And a lot of these people really have piled into the same trades and they all believe the same hype and they all did the same thing. And that's the herd, formerly known as the herd. And that herd, they may still be in trouble. We just don't know. It just depends on how plans have changed and how plans will change. What was really interesting is that I think, and I don't like, I'm really not in this for the credit that people try to get out of these things, but if they are, that's fine with me. They got to do what they got to do. I'm in this for trying to help out, and my recollection is that we had tried to mention that there were this is a notoriously manipulated sector, XAU, gold and silver. B, it was probably be careful on a false breakout and be careful on overbought. They did take it down with the market, but it really came roaring back. And we did see a lot of paper that came in, and I put a lot of trades in this week in there, relatively speaking. Not as many as I have at other times, but certainly I've done that at other times, gangbusters. But there were a lot of hits that came in. So what I've seen is that people believe that a lot of players are dumping the dollar and they're heading into gold and silver, the precious metals. Now, normally when the dollar goes down, the gold usually goes up and vice versa. So there's nothing new there, but this is really an incredible sell off, if you will, in the DXY. So pretty incredible stuff. Probably is overextended, but the big picture thing, well, we should then we naturally, right, with people doing this and dumping their bonds, and with bonds being sold, your yields are going up. And I did it again out of habit. CGI. You can see yields have really spiked, and this is obviously not a good thing. And the Fed apparently is, I guess, just riding it out. It seems like. Um, we'll have to see if that holds true. But anyway, those two things happening are pretty darn interesting. I think that's telling you something's out there, something's, not normal. I don't know. It could be that people know that there's a problem that's not made it to the public yet. That's why the VIX was able to close at this super high level. They don't want to let it go. On the flip side of it, maybe the worst is behind us. I just don't know. But I do think that the market conditions, in the form of really a spike in the yields as we just saw, the dollar just getting annihilated as we saw, everyone screaming their way into precious metals this week. The longs in there I would think they did very well, the kind of rebound it had. So that's all very interesting, all very interesting. So I hope that us keeping let's say, keeping our eyes on these things for a long time, maybe that's paid off for people because they've been moving these things up now for some time, and there's still a great deal of potential in them, if you ask me. The XAU chart doesn't show it, I think, as well as the gold and silver ETF charts on the big picture stuff. And we talked about this. I remember talking about this many times that if it could break out of this cup and handle and go through, usually that pattern is forceful. And I didn't even realize it, but it pretty much, I'm going to call that it made it to our highest projection at this point. This was laid in place a while ago. So just remarkable, what's happened in there. I hope that folks that are consistent watchers did well in this space because we're not, it's not like it's exclusive to us, but I think just being thorough, the way we try to be, we were able to keep an eye on that as well. And when the pattern really shaped up, it clicked. Now, silver, as is often the case, is lagging dramatically. And I am not an expert in either metal, let alone both. But I know from having done research in the past that this is often the case, and eventually silver does put its move together. And I've traded that a few times. I was lucky enough to trade it in here. There was another move even before that, but that was in the silver market, not the SLV. But I participated in that through other instruments. That was back about five, I think 4 or 5 years, maybe 6 years. I can't remember before this 2008-9 debacle. But this still has a lot of potential to go. So you may want to keep your eye on this. This is actively suppressed. It's been that way for, as far as I know, decades. But if gold keeps firing, people could start looking at SLV and related names. Some of the junior miners, they could look at major miners. We did have paper in them. I mean, I just absolutely love the technical potential here, and I think it's if you look at this GDXJ, it just seems on the cusp. Unfortunately, we're looking at quarterly here, and it's probably a little overbought in the short run. So, and you can see that. So that's the problem, right? That we're coming and covering it a little bit more in depth. But people really don't like when we go through all these symbols. So I've cut this back dramatically. We used to, between both videos, I think we used to almost go for 2 hours, and that was doing it kind of like Mick Rebellion, like not the way I would do it, but as quickly as I could, just so that folks got the coverage that I thought they could use. But yeah, this sector has just been something. Newmont, we had paper on in there as well. So I put one in for there. And I mentioned, right, that it's short term overbought. Just be careful. But if they really get their hands on this thing, that may not matter. And what I would do, and I put in, I think, a pretty smart trade, I put in a diagonal spread that's not in the money. So it's kind of like more of an at the money diagonal, but it's got some real upside potential. But what I would do is if that starts to really work out for you, um, I would just uncap. I would just close that, take the profits, and roll up into slightly out of the money calls, and then basically do that with what you've earned at that point. If you get a nice pop from here, I don't even know if it triggered though. It was a new idea, I believe, as of today. So that's that. Trying to think of anything else that without going too long in this video. It's always the pressure that I feel. Let's see. I'll bring back our notes for us. I think I covered all those. So yeah, the main point I'm trying to make there is it's just not normal. These things are not normal. So we just don't get lulled into a false sense of security, thinking like, oh, the White House says this and that. I'm not saying that the White House is lying. I'm not saying that they're not lying. I'm not saying that that particular reporter isn't telling the truth or is. I'm just saying that my experience has been that things are very fluid and bogus things even get floated during sell-offs to create rallies, and then other people float other things to create sell-offs. It just happens, and unfortunately, I don't recall many prosecutions, but there should be something there when people are promulgating BS intentionally. It really should be some form of market manipulation, but that might shut down most of Wall Street if they started to prosecute for that. But with respect to this type of stuff right here, let's just talk about that before we take a final look and sign off. The bond market. Jamie Dimon talked about it. It seems like, right, with what's happening, this type of volatility is really the way we got smoked in TNX, which might help to bring up the way we got smoked in TNX right last week, and then so basically right yields plunge last week, and then yields ramp this week. So this type of volatility they're claiming right, and all that's been happening, and this kind of equity slide that's creating these major problems, and it could be that things become unstable. So just keep that in mind. Now, with respect to these other points, you know, I said this on Cocktail Hour, I don't hang on every word that Jamie Dimon says the way CNBC seems to, in my opinion. But every now and then, I think, he does make important points, and I think he's saying there's going to be further disruption, and so that him coming out saying that probably should carry some weight, at least in my mind, it should carry some weight. But anyway, the bond market's no joke. Neither are the foreign currency market. And so there's some people that were on that yen carry trade issue pretty big last summer. They're back on it again, saying that we're about to get an echo that's worse than the first yen carry trade, let's say fiasco tantrum. So don't know, but they're claiming the Japanese are basically right. They're trying to manage the situation. They're dumping their treasuries, and that's what's causing the yields to spike. And then they're, I guess, manipulating the dollar yen market with it, to keep things from exploding or imploding, or however you want to phrase it. Don't know. It's just something I came across, which is just another reason not to go to sleep. Another reason to kind of have like a your Esther house warning at the ready. You don't want to get too lulled into a false sense. I think there's economic deterioration that's obvious and is almost like being ignored again, much like a lot of signs we thought were being ignored, much like complacency seemed to be pretty high to us maybe just a month ago. And, now we see what happened when people weren't even hedging and all these things that seemed like the prudent thing to do. So yeah, I think that's being kind of glossed over right now, and I think I've seen where S&P 500 earnings expectations are being revised lower. So for them to bounce the market all the way back in light of deterioration, in light of the EPS expectations coming down significantly, all these types of things, it wouldn't make any sense, but it could happen. So I just wanted to add that comment that if you're trying to make heads or tails out of it, just remember the market's kind of like in the short run, it's just some kind of a wild beast that can do pretty much what it wants, right? So you might say, I can't believe we're down 5% from the all-time high when the wheels have fallen off. But I've been in that position myself a few times, and I get your mindset. If we do pop that much and you're thinking the same thing, I would understand 100%. It's just that's possible. I've lived through it. So if you're wondering what could cause that, it would be internal plumbing. It would be a lot of people that flip the wrong way, and now they're going to cause the pain trade. They'll cause it to go back up, and they'll get people scrambling to cover. And the news cycle will probably aid that, and then it'll seem like things are coming together and improving. So this is what they do, so you just got to be ready for it. Again, this is more of a trade what you see, right? If you can just say, hey, the short-term trends have flipped, I'm going with it, and then you see it peter out, there you go. I mean, that's really, I think, what you got to try to do in something like this, and just be really disciplined. But I think overall, it's a very tough picture to make the best sense out of. I still think there's got to be a lot of uncertainty out there. Market doesn't normally thrive. We talked about that many times with respect to uncertainty. So keep that in mind. But the other wild card would be that I know Trump has floated some of these things on social media. I don't know if he's made comments about them that were ever broadcast, but I've heard these comments get floated on social media, supposedly from Trump, and that he's claiming that he's going to push to eliminate the income tax on folks that earn less than $150,000 per year. I I think that's a massive mistake because I don't think there should be any income tax. And the fact that he's willing to still accept the income tax as this form of revenue generation for the government to me is a massive mistake. But at the same time, my feelings aside, you have to say that that would probably be looked at as a positive because of the kind of money that would free up for so many people. How they offset that, I don't know. That's really where it gets a lot trickier, right? Where you say, okay, I'm going to cut this much, but if I cut that much, how do I mean, if I cut taxes that much and I reduce revenues, then how do I pay for, what I need to pay for? How do I handle this budget wise? Um, I don't know what the answer to that is, but I'm also somebody who really, is not in the mainstream politically. So I'm more of an Articles of Confederation, small government, l- leave everybody alone, do the minimal type of guy. So I don't like the big picture stuff, the wars. I don't like the intertwined stuff with banksters. I'm more of like, let's make it as basic as possible so that everyone can have maximize their freedom. But that doesn't sell well, I guess, anymore. But I'm stuck in that, so I don't think I'm ever getting off of that. I've been on it for too long of a time. So that's where I am. But regardless of, as I said, regardless of where I am, if Trump can work that out or push that through or whatever, that might get a lot of people to just really go loopy over this market, thinking there's going to be a massive liquidity in the economy, which will then ultimately find its way into the market and help the market in various ways. So I don't know if that's possible, if it will happen, but I do think that that's starting to be perk up just ever so slightly in social media. So I think on that note, I'm going to wind things up because I don't want to go too deep. We've already probably gone way longer than I plan to, hope to. It happens every week. It'll probably never not happen unless somebody helps us get this very tight program together that we stick to. But that's it. Again, final wrap is I think that we're trying to extend. We're on the cusp of extending a relief rally. We see where it goes, and that's always a news neutral assumption because I have no idea, obviously, what's coming up. But I don't think you can argue with the fact that things got a little bit better. And you're still in the woods though, and you just don't know how far you could be. You could be 100 yards from leaving the woods, but then again, you might be several miles from leaving these woods. We just don't know. But that's because we're still in this uncertainty phase, and we need more things to click in place and become known. And then I think once they're known, that could probably help, unless, of course, what's known is not something that the market finds palatable. But on that note, I'm going to wrap up. I'm going to wish everyone a great weekend if you get to watch this early. Have a great week ahead. I do hope something that I share with you helps you out this upcoming week. Maybe it helped you this past week, maybe some week in the future. That's what I try to do this for. So hopefully something I learned can help you not make the same mistakes that I did. So everyone take care and thanks for tuning in.